there are two films. If I contribute is 10,000 into the business, there are two parties, one as a owner, one as a business. What's your outstanding balance? 7,50,000. 10% of this 75,000. You are paying how much money? 3 lakh. 3 lakh includes the interest. Here the royalties are more. We recovered from the royalty. Then how much you recovered? 70,000. It is coverage. First year shortage, back down here, it has been recovered. How many years time is given? 2 years. In the second year, it has been recovered. Hello, my dear student. I am Dr. B.S. Subramanya, called by name Dr. B.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. Now, in the last session, I handled the 10 marks question. Now, in this session, I am going to hand 15 marks question. So, the split of the question paper is 2 marks question you have to answer 5. 10 marks, they will ask 7 questions, you have to answer any 5. 2 marks question, that is next is section B, you have to answer 10 marks question 2 out of 4. Then 15 marks question, you have to answer 2 out of 4. This is the pattern of the question paper. In the last session, I handled 2 marks question and the 10 marks question. Today, I am going to deal about the 15 marks question. They will ask 4 questions. Out of 4 questions, 1 is the theory and 3 is the problem. I concentrate only on the problem. Regarding the 3, I will give the hint and go, and I will explain the problem very detailing. You can select the problem they are going to ask. 1 on hire purchase system, 1 on royalties, 1 on final account. You select any 2. If you feel good in writing the theory, go with the theory. Whatever the answer we have got, PDF have been given in the classroom. So same will come. So what is the question to be asked? I will tell you which is the question to be asked, how to answer, I will give the hint. We'll move on. Total marks is 60. I already handled 5 questions out of 7. Then part B, you have to answer any 2, each carrying the 10 marks. Then section C, you have to answer 2, each carrying the 15 marks. So the first question goes 15 marks. It will go like this. Answer any 2 of the following question. Each question carries 15 marks. What is the first question to be? First question is a theory. If you are really interested in writing theory, you can go through the, just take the particular concept. I will explain. Then you can go one by one. So he said, briefly explain. The word is briefly explain accounting concepts and convention. So here, accounting concept is necessary assumption and ideas are fundamental accounting. So, which are the concepts are? First, you see, so you give a list of the concepts. Basic accounting concepts are, one is business entity concept, money measurement concept, going concern concept, accounting period concept, cost concept, dual aspect concept, that is accounting equation concept, we say revenue recognition concept or realization concept, then matching concept, accrual concept and objective. So every point you have to touch at least a minimum 3 to 4 lines, you are right, and you can move on. Because this is a major question, we'll move on to first one. What is business country? Just you write down. It means in accounting, every business undertaking is regarded as separate unit entity, quite distinct from the owner home name. Here, separate entity, you mean to say that there are 2 firms. If I contribute is 10,000 into the business, there are 2 parties, one as a owner, one as a business. One as a owner, one as a business. Who is receiving? So business is receiving at one end, giving the other. So this is an entity we say. One is the giver of the account, one is the receiver of the account. Who is receiving? Company is receiving. He is the receiver body. Who is giving? Owner. But he is the owner, he gives the hand, but entity is quite different. So we talk from the 2 different angles. One is the receiving end, one is the giving end. Owner gives, so goes from him. Who is the receiver? That is the business. Is the receiving end, it is called a giving end. That is called, we say that business entity concepts. Here, in other words, the business and the owners have to be treated as 2 separate entities. Then, money measurement concept. Here it means only transaction will be taken in terms of money only. What is transaction? Transfer of property from one person to another person is a transaction. There are two types of transaction. One is called cash transaction, another is called the credit transaction. Transfer of property from one person to another person for a cash, it is called cash transaction. You will go for a money. The money means a credit transaction. Money will be paid after 15. He promised to pay the money after 15 days is called credit time. But now we are dealing with only money measurement. All things goes in favor of money only in terms of transaction which cannot be expressed in monetary term, such as appointment of a manager. Let us say only cash transaction will be taken into consideration. Then going concern, it means accounting is regarded as a going concern. It is going to be not what's called. In other words, according to this column, a business enterprise will continue to operate for a long period of time. It goes with a long time, not for 1 year, 2 years. It is going for a longer period, maybe 10 years, 15 years, 20 years, 40 years. That is why it is called going concern concept. Then number 4, accounting period concept. The accounting period may be April to March. We start from 1/4 April to 31st March, or it may be start from 1st January to December. That is called the calendar year. April to March is called financial year. That is called accounting concept. Then cost concept or historical. Cost concept means an asset, a fixed asset. Fixed asset means land, building, machinery, furniture acquired by a concern is recorded in the books of account, and purchase price at the time of acquisition. The cost price includes the cost of acquisition, transportation, installation, maintenance. When you purchase the land, when you purchase the machinery, along with the machinery, whatever the expenditure that is income in bringing the machinery from the particular place to your own area, so that cost will be added to cost, what's called the machinery. Then only we can say the cost. The cost of the real machinery is 1 lakh and the transportation cost is 10,000. Then we say what is the cost of the machine? We say 1,10,000. So that will be taken away. Then dual asset accounting. Every business transaction always result in receiving of some benefit, some value, and giving the other bill. Here, dual concept. For every corresponding debit, there is a corresponding credit. I will give an example. If you purchase a land, if you purchase a building, what's the common generality? We are going to pass building account data to cash account or building account data to bank account. So one end we are receiving the building is a benefit. Another end cash is going out is a loss. We say it's not a loss, cash is going out. So two aspects of the trial, dual aspect. One side is benefited, one side is an expenditure. We assure that it is not a loss, but your experts call your cash is going out one end, other things benefit is coming. That is a real. Here, every business stand result in receiving some benefit. That building is coming in some value and giving the some other benefit. No, he is the receiver of the cash. So what's the entry? Building account data to cash account. Receiving the building is a benefit, giving the cash benefit to him only. TSLR. Dual aspect principles of account. It provides the basics for recording the business time in the books of the account. In fact, this concept forms a double entry system. We follow the double entry system means we have got a certain principle, personal account, real account, and nominal account. Connected to person is personal account, connected to property is called real account, connected to expenses is called nominal account. We have certain principles. According to principles, we have to follow. Here, asset, duality principle, asset is equal to liability plus capital. If we take the liability this side, asset that side, asset minus capital plus capital become minus capital, or we can say capital is equal to asset minus liability. Asset plus liability become minus liability. This is called fundamental accounting equation. Asset is A is equal to L plus L. We can say that this is called assets is equal to liability plus capital, or we can say A minus L is equal to C, or A minus C is equal to L. So asset is equal to liability plus capital, asset minus liability is equal to capital, or asset minus capital is equal to liability. We can interchange. Revenue recognize realization concept. The concept revenue requires that the revenue from business transaction should be included in the accounting period. Whatever the revenue received, that should be included in the particular year. That is nothing but the profit of the concern that should be shown. Revenue means sales. Whatever the sales amount you have got, that will be shown in the books of account, and revenue to be recognized as considered realization only when the goods and service transferred to the customer and the customer becomes legally liable to pay them. Whatever the amount we are going to receive is that should be shown in the books of account. Matching concept, it means to measure the profit or loss of the business for accounting period, all the expense incurred should be matched, deducted with the revenue income earned during that accounting year. So we have got one income side, one is called expenditure. Whatever the revenue received from the revenue, all the expenditure should be deducted, shown in the books of profit and loss account. Then the net figure should be shown. All the expenses relating to business should be deducted. So income and expenditure, you prepare an account called profit and loss account. You show the profit on the credit side, all the expense on the debit side. From the income side, deduct the expenditure, the net figure should be shown. Then accrual come, that means that revenue accrues in the year in which they are earned and not in the year in which they are actually received, and expenses accrue in the year in which they are in. So there are some amount which it's a receivable account. We say that some amount to be received. So that should also be taken into consideration. So somebody has all have to pay 1 lakh. Out of 1 lakh already paid 80,000. He says, I will pay the money at the end of this year, another 20,000. That should be taken into consideration. Even the accrual should be taken into consideration. Then accounting convention here. Here, first important conventions are convention. An accounting convention may be defined as customer generally accepted profit, which I adopted either by general agreement or come. So some convention is according to this agreement. First is convention materiality or material concern. It means in accounting, a detailed record is only those business transactions which are to be used for accounting. Only accounting information material should be utilized. Just take the point. Example, according to this material convention, when a pen worth rupees 20 is put to use, the entire amount of 20 is treated as an expenditure immediately. You purchase a pen for rupees 20. When you pay the 20, it's considered as an expenditure, though the pen may be used for few days, but it's an expenditure for you. Then this convention conservatism concepts is there. So it means an accounting record and financial statement of business, just at the point, should be considered and provided the perspective of the profit and loss account. So valuation of closing stock at cost or market price, you have to value market price. Whichever is lower, you have to value the closing stock at the end of the year. Either the cost price or the market price, whichever is lower should be taken into consideration. So closing stock means unsold stock should be valued either the cost price or the market price, whichever is less. Fourth one, convention full disclosure of the concept. It means all the material fact relating to the accounts must be disclosed in the financial statement with sufficient. Example, in case of sundry data, not only the total amount of the data should be disclosed, but also the amount of the goods and what's called secure data and the amount of the doubtful debt should be mentioned. So while you are calculating the data, you have to mention amount to be debtor. Means when you make the sale credit sale, he become the debtor and we become the debtor. You should mention debtor also, the RBD also. You should also mention doubtful debts. That's also be mentioned. That should be shown in the books of account. Not only debtor, even the reserve for bad and doubtful debt and a bad debt should be shown in the books of account. Not only a debtor, you have to show that RBD also. Just take the point. Here, the practice of giving notes related to various fact items which do not find the place in accounting statement according to this convention. There are some items which cannot come in the statement of assets also should be taken into consideration. Come back to problem now. We are touching. Slowly I will go now. Tarnished Transport Limited bought 2 trucks costing rupees 5 lakh each from A&T company on 1/1/2018 on hire purchase system. Means we purchase 1 truck cost 5 lakh, you purchase 2 lakh, means 10 lakh rupees. The down payment was 2 lakh 50,000. Out of 10 lakh, how much you have paid? 7 lakh 50,000. And the balance in 3 annual installment, 3 lakh they are going to pay. How much you have got? 7 lakh 50,000 to be paid, but you are paying 9 lakhs. Whatever the difference comes, that is the interest. Actually, you have got 5 lakh into 5 lakh is 10 lakh. So how much you have paid? 2 lakh 50,000. I will explain. Along with the interest of 10% per annum, Tarnished Transport Limited provides the depreciation at 15% per annum. On original cost method means depreciation remain constant. Then you are required to prepare necessary ledger account in the books of transaction under asset accrual method. This method I am going to explain. So what is the cost of one truck? 2,50,000. Here transport, the cost of one truck is 5 lakh. How many trucks we purchased? 2 lakh. It costs 10 lakh rupees. But how much you pay down payment? 2,50,000. What is your cost? Your cost is 10 lakh minus how much down payment? 2,50,000 you have paid. Balance is 7,50,000. In how many years? 3 years. So 25,000, 2,50,000 per year you have to pay. Totally 10 lakh. How down payment? 2,50,000. How much money to be paid? 7,50,000. You paid how much money? 9 lakh rupees. Instead of 7,50,000, you are paying 9 lakh. The difference between these two is called your interest for 3 years is cousin. Every 3 lakh includes the interest. I will explain slowly now. See that. What is the cost of the machine? Here cash price is 5 lakh, totally 10 lakh. How much down payment? 2,50,000. What's the balance available? 7,50,000. For how many years? 3 years. But you are paying every year how much? 3 lakh, 3 lakh, 9 lakh rupees. So you are paying 9 lakh rupees. 7,50,000 plus 58 lakh plus 1,50,000 extra you are paying. So extra you are paying. So here see that what's your 10 lakh? Down payment is 2,50,000, 750 is there. So every year you are paying how much? 10 lakh on the outstanding balance. What's your outstanding balance? 7,50,000. 10% of this 75,000. You are paying how much money? 3 lakh. 3 lakh includes the interest. 3 lakh includes the interest. How much interest is included? 75,000. Out of 3 lakh, deduct 75. Actually, your principal money, you are paying how much money? 2,25,000. Deduct that 5,25,000. If you deduct the 2,25,000, what's the balance available? 5,25,000 for the next year. So this year also he is going to pay 3 lakh. 10% of 5,25,000 is 52,500. But he pays how much? Very 3 lakh, which includes the interest. 52,000. Actual amount is how much? 2,47,500. Instead of how much he is paying? 3 lakh rupees. Deduct 2,47,000. How much will come? 2,77,500. In the last installment, you have to clear up the loan. We have to clear up the installment. How much he has to pay? He paid 2,77,500. But he pays how much when he paid? The difference between these two is this amount. Out of 3 lakh, deduct how much? 2,77,500. Don't calculate the 10% rate. What's the balance to be paid? 2,77,500. But he paid how much money? 3 lakh rupees. Whatever the difference comes, that is the interest. That you have to remember. The last, you remember, in the last installment, he has to pay how much money? 2,77,500. But he is going to pay 3 lakh. The difference between 3 lakh minus 2,77,000, whatever the difference comes, that is the interest. If you add all this interest, you get the 1,50,000. Come back to depreciation. Depreciation remain constant. Your value is 10 lakh. How much percentage? 15%. So 1,15,000. Original cost method means the depreciation remain constant. Depreciation remain constant. Every year how much? 1,50,000, 1,50,000, 1,50,000. We'll move on to ledger now. This is hire seller account. What's the entry goes now? Truck account debtor, interest account debtor to hire seller account, hire seller account debtor to bank account. First installment, how much he pays? 3. Every year he pays 3 lakh. First, how much he pays? 2,25,075. Come back to second year, he paid. If you see that, you can understand how much he pays. 2,25,000, 2,47,000, 2,07,000. First year. Second year, he paid how much? 2,47,500. Plus interest, how much? 52,500. To bank account, he is going to pay the 3 lakh. Next year, he is going to pay for asset value 2,77,500. Interest is how much? 22, totally 3 lakh. To bank then. Every year he pays 3 lakh. What's the entry? truck account debtor, interest account debtor to high seller account debtor to bank account. How to treat this now? Entry, truck account debtor, interest account debtor to high seller account debtor to bank account. This goes in favor of high seller account. If you pay the truck account, here you come under accrual method. To bank, down payment is 2,50,000. To higher seller account, 2,25,000. Only principal money you have to take. Only the principal money you have to take to balance. By depreciation, 1,50,000. This is accrual method. How much down payment? 2,50,000 to higher seller. This is called higher seller. You have to pay for high seller how much money? 2,25,000. Only principal money you have to take. By depreciation carried down. Second year brought down 3,25,000. To higher seller only principal money 2,47,500. Depreciation of this year. You must remember, don't write the installment price in the accrual method. You have to pay only the principal money, cost paid. How much principal money? 2,47,500 by depreciation of that year. Last year, two balance brought down 4,22,000 to high seller account. A&P company's high seller account to high seller. How much money? 2,77,500 by depreciation 1,50,000. Balance is 5,50,000, which has been brought down. Here you remember, don't pay installment money, the accrual method. You have to pay only the principal money, only the principal money you have to pay. Here first is the down payment, then principal. By depreciation brought down, only principal money you have to pay. Don't pay installment, only principal money you have to pay under accrual method. Then move on. Depreciation account debtor to asset account, truck account. How much? 1,50,000, which has been transferred to profit and loss. Same thing for the 3 years. First, because depreciation remains constant, it is transferred to profit and loss account. First year, second year, take 2 truck account by profit and loss account, 2 truck account by profit and loss account, 2 truck account by profit and loss account. Come back to interest account debtor to higher seller account. First year interest is 75,000 transferred to profit and loss account. To higher seller account, second year interest is 52,500 by profit and loss account. Third year interest is 22,500 by profit and loss account. Transfer entry. Come back here. This goes in favor of the lease royalty. Surya Coal Company took a mine on lease at a royalty of rupees 20 per ton with power to recover short working over a period of 2 years after occurring of short working, subject to a minimum rent of 2,50,000 per annum. The output for the first 4 years were 9,000 tons per ton, 20 rupees, remember, per ton. And then 16,000, 10,000, 14. In the event of strike and the minimum rental not being reached, the actual royalty earned for that year discharge the rental obligation. So, in a royalty, there are 2 parties. One is called the lessor, another is called the lessee. Lessor is the owner. Lessee, here, lessee is a utilizer of the land. So, here, every year, whatever he says according to this norm, took a mine on lease, or right 20 per ton. If the 1 ton is rice, he has to pay how much money? 20 rupees per ton with a minimum rent of 2,50,000 if the royalty is less. The agreement between the lessee and lessor is like a way that if the royalty is less, then he has to pay the minimum rent. If the royalties are more, then you have to pay the royalty, whichever is more. Either the royalty or the minimum rent, whichever is more should be taken into consideration. Law is that either the royalty or the minimum rent, whichever is more, should be paid to the owner. Okay. Here, what is a per ton? 20 rupees. But if there's any shortage comes, this should be paid back, recovered within how many years? 2 years accounting short period, subject to a minimum. Go with this then. So the output for the 4 year. Here, this one I will explain. In the event of strike and the minimum rent not being reached, the actual, whatever the royalty come, that itself is the minimum rent of that year. Here, 10,000 is there per ton. How much is there? 20. 10,000 in 20 is 2 lakh. So whatever the royalty, that itself is the minimum rent. That year, there is no question of separate minimum rent of 2 lakh 50,000. Whatever the royalty earn, that itself is the minimum rent. So royalty and the minimum rent is one and the same for this sentence. So here, what do you mean by whatever the royalty earn, that itself is the minimum rate. We'll go to the table now. Here, royalties analytic table you have to prepare. So this word, yesterday also I told you in the last session, royalty means ROYALTIES. There are 9 words, means 9 columns should be made. Here 9 columns are year, output, royalty, minimum rent, short working not recover, short working recover, transfer to penal account, amount paid to landlord. Here, come back. Your output is 9,000 ton, per ton is 20. It work out 1,80,000, but with a minimum rent of 2,50,000. There was a shortage of 70,000, not recovered. 2 years time is there. You are going to pay 2,50,000, whichever is more. Come back to second year, your output is 16,000 into 20 means 3,20,000 with a minimum rent of 2,50,000. How much excesses come? 70,000. So 70,000 has been here recovered. 70,000 has become. Then you pay the minimum rent of rupees 2,50,000. In the third year, this year of strike, 10,000. Per ton is 20, it becomes 2 lakh. I told royalty and the minimum rent is one and the same. 2 lakh. Even the minimum rent also 2 lakh. We paid the 2 lakh only. Then come back to last year. What's your output? 14 lakh. Per ton 2 rupees, 20 rupees, 2,80,000 with a minimum rent of 2,50,000. Whichever is more, either the minimum rent or the royalty, whichever is more, which is more here? Royalty, you are going to pay the royalty. Either the royalty or the minimum rent, whichever is more, we are going to pay. Come back to ledger now. This is a royalty account. Royalty account data entry. Royalty account data, short working account data to minimum rent. Royalty to minimum rent. Profit and loss account. Royalty, out of the royalty, you pay to landlord how much? If the royalty is more, 3,20,000. We paid to landlord 2,50,000. How much short working recovered? 70,000. So 3,20,000. To landlord, how much you are going to pay? 2 lakh by profit and loss account. Last year, you are going to pay the landlord 2,80,000. Transfer to profit and loss account. First year, 1,80,000. Minimum rent you are going to pay. Transfer to profit and loss account. Second year, you got 3,20,000. Out of that, we paid to landlord how much money? 2,70,000, 2,50,000. How much recovered? 70,000 has been recovered. In the third year, you are going to pay the 2 lakh, transfer to penal account. In the fourth year, whichever is more, that is the royalty is more, you are going to pay the royalty. 2 landlord, 2,80,000 by profit and loss account. Minimum rent, what's the entry? Royalties account data, short working account data to minimum rent. So minimum rent to landlord account. Only 1 year we have got a minimum rent. That's all. Come back to short working. First year, what's the entry here? Short working account data to minimum rent. To minimum rent, how much? 70,000 by balance carried down. Second year brought down 70,000. Here the royalties are more. We recovered from the royalty. Then how much you recovered? 70,000. It is coverage. First year shortage, back down here. It has been recovered. How many years time is given? 2 years. In the second year, it has been recovered. Come back. Landlord account. What's the entry? Minimum rent account data to landlord account. So we are paying 2,50,000. What you are paying? Minimum rent. Second year, you are paying once again 2,50,000. What is that? Is nothing but the royalty. Third year, you are paying how much? 2 lakh. What you are paying? That is a royalty. First year, only the minimum. Fourth year, you are paying how much? 2,80,000. This is nothing but you are paying the minimum rent, you are paying the royalty, you are paying the royalty, you are paying the royalty. Here, all we are paid 2,50,000. Minimum rent has been paid, 2,50,000. Royalty has been paid, 2,80,000. Royalty has been paid. You have to look after the chart here in the chart. Here you tell. Here this is the which is more. Minimum rent is paid, royalty, royalty, royalty. Question number 15. From the following trial balance of Mr. Abhiram, prepare a trading account, profit and loss account on 31st March and balance sheet as on that date. So they will give the trial balance. So you must be very remember this. Trial balance has two sides. One is called the debit side and is called the credit side. Debit side shows assets and expenses. Credit side shows incomes and liabilities. I will repeat. There are two sides are there. One is called the debit side. One is called the credit side. Debit side shows assets and expenses. Credit side shows incomes and liability. If you have the A one word like salary, if it is a debit side, it is called paid. If it is come, it is called received. Understand? Here discount. This is allowed, this is received. Debit side is an expenditure, credit side is income. Debit side is asset, credit side is a liability. And regarding other adjustment, I am going to explain. Whatever the items that come from the trial balance should appear only one. The items in the trial balance should appear only one time. The items in the adjustment appear two times, sometimes three times. So I will repeat. Whatever the items that comes from the trial balance should appear only one. Whatever the item that come from the adjustment should appear twice. That is most important. So debit side shows assets and expenses. Credit side shows incomes and liabilities. Then wages, returns, all these things. Then you have to prepare trading account, profit and loss account, and a balance sheet. Some adjustment. Closing stock, where it will come. Trading account credit side, asset side of the balance sheet. This you remember. Trading account credit side, asset side of the balance sheet. Rate of further bad date. So your formula for bad date plus new RBD minus old RBD. If the further bad date is there, bad date, add further bad date plus new RBD minus old RBD. What's the regular formula? Bad date plus new RBD minus old RBD. So old RBD in the trial balance, new RBD in the adjustment. Old RBD in the trial balance, new RBD in the adjustment. What is the formula? Bad date plus new RBD minus old RBD. If the bad date comes from the adjustment, bad date, add further bad date plus new RBD minus old RBD. Then during the year, goods costing rupees 14,400 were destroyed by fire and 9,600 admitted the insurance. So 14,400 will come credit side of trading account, 9,600 will come on the asset side of the balance sheet as a due from insurance company. Whatever the difference, 9,600 400 means 4,800 is a loss that will come profit and loss account. Where it will come 14,400 trading account credit side, 9,600 asset side of the balance sheet. Whatever the difference loss comes, profit and loss account debit side. And advertisement expenses due means outstanding. So that should be added to the outstanding. Then it will come on the liability side of the balance sheet. Rate of division. So depreciation should be shown on the debit side of profit and loss account while preparing the balance sheet. Deduct from the building, deduct from the furniture. Here, outstanding in the adjustment, add to concern head, liability side of the balance sheet. If the outstanding comes on the trial balance, directly liability side of the balance sheet. You remember, if the outstanding comes in the adjustment, add to concern head. Add to concern head means salary outstanding should be added to salary, wages outstanding should be added to wages, then it will come on the liability side of the balance sheet. If the same item appears in the trial balance, directly on the liability side of the balance sheet. Same thing goes to prepaid. If the prepaid comes in the adjustment, deduct from the concerned head. If the salary prepaid, deduct from the salary, then asset side of the balance sheet. If the prepaid comes in the trial balance statement, directly asset side of the balance sheet. Same thing. Regarding the depreciation, if the depreciation comes in the adjustment, first it will come profit and loss account and deduct from the concerned item. If the depreciation comes in a trial balance, directly you put on the debit side of the profit and loss account. Don't deduct from the asset. Don't deduct from the asset. We'll move on to problem format. Debtor as per trial balance 5,76,000. Out of that, further bad debt 4,800 should be deducted. Balance is 5,71,200. On the 10% is 57,120. If we deduct 5,14,018, debtor will appear on the asset side of the balance sheet 5,14,080. This adjustment, first is debtor minus bad debt in the adjustment minus new RB. Go to the problem now. It starts with the opening stock of 2,64,000, purchases made 9,60,000, then returns. See the trial balance? Purchase, carriage. So drawing should become deducted from the liability. Purchases will come trading account. Sales will come trading account. Carriage inward trading account. Advertisement profit and loss account. Sundry expenses profit and loss account. Debtor is asset. Creditor is a liability. Bad debt profit and loss account. Salary for 10 months, another 2 months is outstanding. That will come profit and loss account. Discount allowed will come per P&L account debit side, 5,760. P&L account credit side. Rent is an expenditure, P&L account debit side. Postage is an expenditure, profit and loss account debit side. Provision for bad and doubtful debts is nothing but old RBD. That is nothing but bad debt plus new RBD minus old RBD. Wages will come in the trading account. Returns means debit side sales return, credit side purchase return. Debit side sales return, credit side purchases return. BR and BP. BR is asset, BP is a liability. Cash at bank is asset. Stock on one opening stock trading account. Land and building is an asset. Investment is asset. Furniture is asset. You go to problem now. Opening stock 2,64,000. Purchase 9,60,000. Out of return should be deducted 49,440. This should be deducted 49,440. It is 9,10,000. Carriage inward. Then 2 wages. Come back here. By sales return. This should be deducted. Balance is 13,98,720 by closing stock from the adjustment. This is stock full value. Stock destroyed full value. Difference will come 4,52,160. That is the gross profit carried down. So your trading account is over. Come back to profit and loss account. Brought down by profit. Gross profit brought down is 4,51,160. By discount, credit entry 5,760. Come back here. Salary for 10 months is 91,200. 2 months outstanding. So 10 months means here, see that 10 months, 91,200, 9,120, 9,120. So here, this is 18,240. It become 1,09,440. Advertisement, how much is there? 38,400. Add outstanding, how much is due is there? 1,600. It become 40,000. Sundry expenses 4,800. Bad debt as per the problem is that 10,560. Add further bad debt from the adjustment 4,800. Add new RBD. You can say this new RBD. 57,120. Then it becomes 72,000. So 10,560, 5,015. So 57,120. So it becomes 72,400 minus old RBD 16,800. It becomes 55,060. Discount allowed 14,400. Rent paid 14,400. Postage 13,014. Loss on stock destroyed 4,800. Depreciation on building 15% of 4,80,000 72,000. On furniture 916. From the credit side, if we take all these expenditure, it will come 1,28,000 net profit of the year. Then go to balance sheet. All the asset will come on the credit side, the right side, liability on the credit side. Come back, debtor as per the working note 5,14,018. BR is asset 1,20,000. Cash at bank 48,000. Landed building 4,18,000, less depreciation 72,000, it become 4,08,000. Investment 96,000, furniture 9,600, 10% of 960 gone, it is 8,640. Closing stock 3 lakh, due from insurance company. Out of 40 lakh 14, how much recover? 9,600. It goes to total 15 lakh 4,000. Come back here. Creditor is a liability. Bills payable 1 lakh 15. Outstanding due means outstanding advertisement, outstanding salary for 2 months 18,240. Then capital beginning is 6 lakh 43,200. Add net profit during the year 1 lakh 28,000. Less drawing during year 11,7 lakh 15. So it will tally for 15 lakh 4,320. So go slowly, 15 lakh 4,020. So regarding this trial balance, you must be remember trial balance. Debit side is an expenditure, credit side is income, debit side asset, credit side liability. Hope I solve the problem. One on royalty, one on hire purchase, one on final account, and I explained a little bit about the concepts and convention. So if you are really good in theory, go with the concepts and convention. Among the problems, you have to solve the 2 problems. Out of the 3, you have to solve the 2 problem. Hope day after on Thursday you go to exam. When the question paper is given, go slow the question paper, understand the problem and do the problem. Hope you will go through it, slowly go through it and have a nice time, and also bring so good name to the institution. See that you are working on accountancy is not at all intelligent, it's only hard work. Please work hard and get the good marks. I pray God best of luck in the examination. Bring the good name to your institution, bring name to your parents, and bring a good name to the teacher. Once again I say that best of luck in the coming exam. Hope will do well. God will help you. Best of luck in the examination.